ICT always states that it's time then price. What he's really telling you is that you should first focus on time rather than price. And in today's video, we're going to cover how to do that. Well, first, you have to understand there are different time elements that ICT uses when trading different asset classes. So we're going to distinguish that first. If you have a good understanding, then you should already know majority of these concepts or the names for them. So whenever you're trading, you'll be trading an asset class that uses a certain time-based element. Example, Forex, they're kill zones, and indices will have silver bullet hours, or you can use the AM and PM session for New York. And as simple as that. And then for Forex kill zones, for different Forex pairs, I will use different kill zones. There are basically 3 kill zones I focus on, which are the New York kill zone. So it's 7 a.m. to 10 a.m. This is all New York time. Then it's London, 2 a.m. to 5 a.m. And then the final one, it's Asia kill zone, 20 o'clock or 8 p.m. to midnight, basically, or 00 or 12 p.m., whatever you want to call it. Since I'm a USD trader, I mainly majority of the time focus inside of the New York kill zone, and I take my trades inside the New York kill zone if I'm trading a USD pair. For silver bullets contain a certain time window in which you enter the market off of a fair value gap, and you look for displacement and you follow the order flow into a pool of liquidity. There are 4 silver bullet time windows which you can find a trade idea can be applied to any asset class, but majority of the time you should really focus on the indices whenever you have the silver bullet time. Again, the silver bullet time will be 3 a.m. to 4 a.m., 7 a.m. to 8 a.m., and then 10 a.m. to 11 a.m., and then 2 p.m. to 3 p.m. or 14 o'clock to 15 o'clock if you're using that time window. So macros are a certain time pocket which gives price a strong delivery to either a liquidity standpoint or redeliver into a fair value gap. Having a bias using this time element will be important and is crucial for when you're looking to find a trade idea. And the macros are, again, here for London macros, the ones for London are 2:33 a.m. to 3 a.m., 4:03 a.m. to 4:30 a.m., and then it's New York AM, it's 8:50 a.m. to 9:50 a.m. and then 9:50 a.m. Oh no, it's 8:50 a.m. to 9:10 a.m. and then 9:50 a.m. to 10:10 a.m. 10:50 a.m. to 11:10 a.m. and then for the New York PM, it's 11:50 to 12:10 a.m/PM, and then eventually it's 13:10 or 1:10 to 1:40 or 13:40 p.m. and then it's 15:15 or 3:15 to 3:45 or 15:45. We're gonna go over the advanced concepts here on the chart. After we got the basics down, we're going to go over how to use these certain time windows. So again, for Forex, I usually majority of the time try to focus during that time window of kill zones. So from 2 a.m. to 5 a.m. right here, this kill zone, I will look for the high and the low. So the high and the low would be right here. So this would be the low of the kill zone here, and then the high of the kill zone will be right here. You can see we took it out during the same time window of the kill zone. And then eventually we came and revisited during another kill zone, and that would be around 7 right on the dot or before that, and then eventually 10. During 7 to 10, that is a New York kill zone. We're going to mark that out a little bit differently. I usually like using kill zones to determine whether or not, the areas of liquidity are validated. So I would use Asia kill zone to see my draw on liquidity. And kill zones can, again, highs and lows on the kill zones can be taken out. So you can see this high was never taken out, but the low for Asia was already ran through, multiple times right around here. It was ran through going into switching over from Asia to London, and you can see that clear as day. So I would look for a trade idea whenever we are inside of this kill zone. And again, you can apply the macro to the kill zone, or you can apply the silver bullet to the kill zone. So you can stack these time elements and layer them together. So again, for the 850 to 10.99, so for the 850 to the 910 macro, you could have found a trade idea here. So this would have been the macro right around here. So we're going to mark that out right now. So 850 right here all the way to 910, and that would be right there. So this would have been your trade idea here. And could you find a trade idea there? Yes, you can find a trade idea there. If you understand how we were using the concepts and the advanced teachings, this is probably by far one of the easiest to understand, the kill zones and the silver bullets. If you're able to read order flow, which is the PD array video, then you understand where we're likely to go using the PD arrays. But if you drop down to the 1 minute here on GU, you would have been able to find a trade idea here, and it would have been relatively pretty easy to find the trade idea, since we have that right there, this little silver bullet trade idea, and then eventually we came back up and then dropped. Where would you have found your trade idea there? To me, I would have just entered. As soon as we ran through this right here, this little 1 minute inversion for value gap, that would have been my trade idea. As soon as we closed below, we waked up into it, I would have entered. A lot of y'all would not have enough confluence, and that's how it is sometimes. But you know, you have a clear drawn liquidity here from the London, and you are still yet to meet it, so you can enter there and then eventually just cut the trade there. You know, it's a very small risk to reward if you do have your stop at the most recent high, and you're aiming for the bread and butter. You know, you're not aiming. It's a 1 to 1.78. You know, you're not aiming for a 1 to 5 if you're trading. You know, and you're scared. You know. But if you're aiming for the big moves, if you have the higher time frame confluence backed by your side, then of course you can hold this trade a lot further than you would anticipate. But if you're following the order flow, you'll be able to exit the trade whenever you feel or whenever you know the order flow is changing. So that's how you use the kill zones here on the Forex pairs. And now we're going to go to the indices and show you how to use Silver Bullet with the macro. So you have a good understanding of all the time elements and how to use a few of them. An advanced way to use them is to look for a certain PDA rate to be created around the scenario or the time element that you are using to find a trade idea or a trade entry. So here we have the S&P 500 indice or index, and we're going to look for a macro inside of a silver bullet. So whenever you align a macro and a silver bullet, macros either sweep liquidity, they either reach for liquidity, reaching for a pool of liquidity, or they rebalance into an inefficiency. And it's pretty simple. That's how simple it is, the macros. For silver bullet, ICT always talked about how you have to look for strong displacement and then enter at the fair value gap, which, you know, the strong displacement occurred in. For here, the fair value gap would be from 10 to 11. And it's pretty simple as that. You know, the 10 to 11 would be right here. Anything from inside here, 10 o'clock to 11 o'clock. And that would be your trade idea. Here on the 1 minute, you can easily find, your eye can gravitate towards that 1 minute fair value gap. And I know you can find it, guys. You can find it. You see what I'm saying? Okay, yeah. Alright, so the 1 minute fair value gap would be right here. It may look as if a little sketchy because we went right through it, but the wicks did the damage and we came back into the first one or the one below it. And this would be the first one, of course, but we came to the one below it. We wicked up into it and then eventually we dropped. That is a beautiful price delivery. The bodies were respected. We had an inversion here. We ran right through it and we pushed up. Where would your pool of liquidity be? A short-term area would be right here. And I know, again, it just, the risk reward isn't there, but you know, it's sometimes like that. You know, you won't get the best risk reward if you are a scalper. If you are a scalper, you won't get the best risk reward. And then if we use a macro here to use it for the trade idea, so the 950 to the 1010 right here. So this one had news again. And today they had news at 10 o'clock. You can see that clear as day, and eventually we started chopping. So this macro, it was either seeking some form of liquidity, and it was right here. And we already took that out, so it was seeking another one. So if you go up to the 1 hour, you will see a rebalance or in redelivery into an inefficiency, and that would be this 1 hour buy side imbalance. Price delivery was strong, so we go back down to the 1 minute. You can see that clear as day. We redelivered into a higher time frame inefficiency during the macro, and then eventually for the next macro. And this one too, you know, during a macro, it could be a little bit after the macro, you will form a PD array, which is a breaker. A breaker is a very powerful PD array because it takes out liquidity and then eventually it moves in the direction that it was intended to go after taking out the liquidity. And then eventually you can find a fair value gap inside of that macro. Usually I like to use the macro before the silver bullet takes out a pool of liquidity or a short-term low and makes a breaker during the silver bullet, leading up into the silver bullet, I should say, and then eventually it creates a fair value gap inside of the silver bullet, and we usually retest it and rally. So that would be two confluences mixed together, and that would be a unicorn model that is very powerful. And that's how I use macros and silver bullets. You can use SMT if there isn't any sweep. So if there wasn't a sweep here and we go to NQ and there is, then that would be SMT. And so you would go to NQ and trade that one because that one will have the stronger PD arrays to push price in the direction that you want it to. But again, that is pretty much all I use for time-based elements. Hopefully this video helped you and hopefully it was insightful. And if you want more videos like this, then of course drop a like and subscribe so you won't miss the next one.